everybody, today is Thursday, July 28th, 7:58 Eastern Time. I didn't download the Dark Pool database yesterday, I apologize about that, so I took care about my family and I didn't have time, but so sorry and so sorry about that. But anyway, let's talk about what I have been seeing and I'm trying to explain to you guys, especially in the yesterday video that I post in the group when I was in my son soccer school. So the most important thing that you guys understand, forget graph, and forget what everything that you guys read in Twitter, because the majority of the people just look for economic data. And do we guys know that we are in free fall regarding economic growth? Right? We are in free fall. We are going to a recession. Maybe we will enter a recession, maybe it's not. Looks like that we will be entering a recession. I don't know when. A recession takes time. So far, people have been expanding their credit card. So, and also, market is not economic data. Market is not earning, companies earning. Market is liquidity. Okay, and let me show something to you guys that I explained yesterday in the video. Look at the DXY. You guys already realized that the DXY came for 70 points to 109. And people still bullish, right? Even with a bearish sentimental, people are with a bullish investment. I showed you yesterday that we don't have more liquidity in the group. Remember that I showed that this graph, and then last night I showed this one. We are entering in a market that is running out of liquidity. Okay, we saw a lot of outflow in the couple of last months, but people still are in nowadays without hedge. But in another hand, why market is going up? Because we don't have sellers anymore. Okay, we are not seeing aggressive in the seller side. But let's go back to the DXY. The market, this is the equation. I don't know if it's that's the formula that I use to measure risk on and risk off. Basically, is a very easy formula that I use the TNX, that the yields multiply per the DXY, and I divide by 161 just to reduce the decimal house. So nowadays we are in a risk between risk on and risk off. Above 2. Let me go back there. I have my notes. Yeah. So above 196 risk off. Between 85 is the ideal. When you see this below 100, buy every dip. Nowadays it's still dangerous. Okay. I like to say that's the yellow zone, and above is the red zone. And why is in yellow zone? This is what I'm trying to explain to you guys. First of all is the DXY. I don't know if it's the Federal Reserve, I don't know if it will be the ECB, I don't know if it's the Bank of Japan, but somebody's doing swap at the overnight. Look what's happening with the DXY, especially 6 a.m., 4 a.m., 3 a.m. It's in the overnight. They doing swap. They devaluate the dollar. Why? Because market, first of all, is running without liquidity. Second thing, dollar is already ready to jump, to melt up, to skyrocket. So, and what this is happening with the dollar is skyrocketing? We will see a collapse in the entire market, especially outside the US. If the dollar is skyrocketing, the money is coming back to US. Of course, that's not good to US too, because we could see a global default. Hope you guys understand that. The dollar is the most important variable in the market, in the economy. The dollar is the king. Our other assets depend of the value of the dollar. So somebody else, I don't know if it's the Federal Reserve, I don't know if it's the ECB, I don't know if it's the Bank of Japan, but somebody in the overnight have been doing swaps. When they do swaps, they devaluate the dollar. But you guys can see when the dollar go, nearby 106, 106 lower, a lot of buyers jump in, right? As I told you, like my wife is buying, and you see what's happening soon. Not only her, when she get the level that's 106.1. The dollars spiked to 107, 200, 107.2 something. Remember that day? So, because our big players, our makers have been buying DXY. They know things that we don't know yet. So, somebody's doing swap. Consequently, they evaluate the dollar for a while, because at the same day after the overnight, starting the day, the dollars go back up again. They are really locked between 106.409 and 107.318. It's a very huge accumulation. Something is gonna happen. I don't know what will be. But I hope you guys understand that the dollar is the king. And somebody else is doing swap to devaluate the dollar to make the entire market healthy. You guys saw a very huge drop from 4,818 up to 3,600 without volatility. The VIX didn't spike anytime. You guys didn't see a VIX above 40, and we dropped what, like 20%, 30%. Right? Without any volatility, because the mechanism that the central banks is using to keep the markets in a risk-on mode. So the first one that I told you was the dollar, the DXY. The second one is the TNX. Yesterday I was looking for the Fed balance sheet. I didn't find it, but I will keep looking for. You guys, as soon as you find the sent to you guys will realize that the Federal Reserve have been buying bonds, especially yields, the Z-key. So as soon they buy yields, they buy TNX, they buy 10 years yield, they keep the yields below 3%. Below 3%, with the swap that somebody have been doing to devaluate the dollar as well, we enter in a risk-on mode, and consequently the money come back to the equity, right? And the market is keeping going up. That's the mechanism. That's the structure, to keep the market healthy. Remember, market is liquidity. The Federal Reserve have been taking little by little liquid from the market. They are. See, because you see the balance sheet. One second, okay. The balance sheet is going down. Forget the MBS that you guys see a lot, but you have maturity. But they have been using another mechanisms to keep the market healthy. So they keep injecting liquidity to the market through the mechanisms that they have. Swap and buying bonds. That's what they are buying. And consequently, the markets go up. But in another hands, maker is not buying the market because they know something. So if the market go to 4,100, 4,200, wherever they go, is because we still have liquidity provided by the central banks. I hope you guys understand that. Okay, that's the first point that I need to explain you guys. So basically, Federal Reserve for sure is buying bonds. Bank of Japan also, they are buying bonds over there in Japan. Okay, who do the swap? I don't know. It's a central bank because it's trillions of dollars every day. It's not a regular person to do that. Even BlackRock, that's central banks. because they have the power to, generate money. And then they're doing swaps every overnight. That's easy to track this. Just check the DXY every morning, every 3 a.m., 4 a.m., 5 a.m. That's the time that they do the swaps. Okay? So they keep providing liquidity to the market. So market is going on. So talk about the ES. I use that Fibonacci because that's the one that have more equality. I don't know if that's the correct word, with the support and the resistance that we have nowadays. So my 38.2 is exactly 4027.50. And we have been testing this right now. And consequently, according all the graphs that we have been seeing, especially the Claudio Fractal, this is the W that he's looking for. So far, it's still running according to the script that you have in 2008. Okay? Also, as I posted yesterday, if you break this Fibo, this region, and consequently we already closed the gap, we could backtest, this EMA. That will be a good level to short, and consequently will be a 15% rally. We never saw 50% rally. I mean, I'm talking never because I saw just 2008. Maybe we had, but based on what I saw, we didn't have like 50% rally back in 2008. In 2008, the big one was closing from 50%. It was 14.33%, and the biggest one is 14.80%, almost 15%, but it wasn't 50%. So if we rally up to here, you'll be 50% rally. And consequently, in the monthly graph, we will see the elastic that I'm expecting. If in August, you will see a big drop. Otherwise, we will see a reversion to a bull market. Remember that, technically, we are not more in bear market anymore. Okay? Because we lose only. Yeah, we lose only 16%. Bear market is above 20%. Before we lost 24%. Now it's just a regular correction, 16%. We are not more in bear market anymore, technically. But looking the weekly graph and the monthly graph, of course we are, because we are trading below important EMAs 50 and 20. Of course, that in the daily graph you already break both of the EMAs. Okay, so the region that I'm looking for, the first one is the one that is already complies, that 4027 is really respecting that region. Breaking this 4076, 86, and the possibility to go to 4188. We need to look for that region, especially for the big orders that jump in yesterday at 12 p.m. Remember, $7 million that should for 4,000 strike 4,080, if I'm not wrong. So somebody will try to take us up to there. Who will be? I don't know who will be. But remember, it's running out of liquidity. We had a lot of outflows in the beginning of the month, starting in the end of the last month, the last year, right? We had also a lot of shorts in the market. They already clean up again, as they did in January, as they did in March. They have been doing right now. So they already clean up the market. People is not keeping the short because they don't know the movement. Nobody knows. Nobody knows. But those are the region that I'm looking for right now. But so far, 4027 being respected. We could see accumulation in that region until central banks take out the liquidity from the market. Guys, be careful. Don't be anxious. No FOMO, FOMO, because this is not a bull market yet, especially because of the liquidity. Take care.